You're watching a recap from Investor XP, the show that covers investing for gamers. Check out the video description for details. It is Monday, May the 1st, and we have a great show for you today. If you're watching the live stream, the chat is open, so go ahead and send me your comments or questions. I'll get to them as I can during the stream. If you are watching a recap video, the topics that we're covering today are Black Ops 3 Chronicles. We're doing a Mario Kart 8 review. We're doing an in-depth look at our current portfolio, and we'll be talking about a Siri device for Apple that could be coming out pretty soon. So, if you're checking out the recap, those are some of the other articles that are going to be up on YouTube. So go ahead and check those out as well. We are going to do an in-depth look at our portfolio to give you an idea of how the show works and what we do on the show here. We cover a couple of things. It's primarily gaming, technology, and entertainment is what we invest in. But we monitor a portfolio, which is my kids' college fund, and that we're open about what stocks we actually buy and own. They're on the ticker below, and we'll go in depth in that portfolio. But on that portfolio, we only invest generally once a month. We'll buy stocks and add to it. So over the course of the month, I have different opinions on stocks, and we keep track of those on a different sheet. So because it's the start of the month, we're just going to go over in depth our entire portfolio, the one we own, and then the picks that we have during the show. So let's dive in. Let's start with the kids' college fund portfolio to begin with. So pull this up full screen for everyone. Here are the stocks we own, and here's how they've been performing. So we're going to go in detail a little bit of why we decided to buy them quickly as we run them down. GameStop was the first stock that we bought. It is down almost 4% since we bought it. It missed on some earnings guidance, but the reason why we like GameStop is because their strategy of changing the stores over to a collectible business. They've been very good at diversifying what they do, and they pay a great dividend, so which looks like it's going to be sustainable for a while. So that's why we like GameStop. They're down, unfortunately. Hopefully they'll be picking up soon with the sale of the Switch and different things to kind of give them a little boost as they transition their business. Next stock that we own is Apple. Apple's been doing very well. We like it for various reasons. Huge pile of cash on hand. Okay dividend. They are big players on the smartphone market. A lot of innovation there. We've liked Apple for a long time. They're up almost 25%. Nintendo and Apple have been going neck and neck for the stock that we own of who is up the most. Nintendo's lagging Apple a little bit right now, but they're almost up 24% themselves. The reason why we like Nintendo is, again, they have a big pile of cash on hand, and if their hardware business were to fail, we think they could make up for that by axing it and just selling their games on the Xbox and PlayStation. So we like Nintendo long term for many reasons. They're probably one of the best game developers out there. We like them and Activision as the top two. AT&T, this was a pick. I kind of got the idea from the kids. We were talking about, what car stock to invest in them, and ultimately we decided to go with a cell carrier because they may not be driving cars by the time they're off to college. It could be Uber, could be the way of driving around. So of the cell companies, we liked AT&T because what they're doing, bundling DirecTV with it. They're going to be purchasing Time Warner and HBO. So we like what they're doing in bundling those things with it more so than Verizon. So AT&T is who we went with there. Disney, we like Disney because of the franchises that they have and their movie lineup coming up. They pay a dividend. Lots to like about Disney. It's up almost 5%. Activision is our next stock that we own. We're going to be talking about them more in depth in our recap on Call of Duty Zombies Chronicles that's coming out. But Activision, one of the biggest and best game developers out there, they pay a dividend. We like their portfolio. WWE is down almost 4%. Reason why we like WWE is it was an alternative pick to Netflix. I think Netflix is a little pricey for what they've got going on. And we wanted a cheaper alternative for a streaming channel. WWE is really leading the way as far as an online service, and they're pretty much a monopoly and they pay a good dividend. So Qualcomm, we liked Qualcomm because they're targeting cheaper flip phone markets that they're going to try and get a share of, and they're going to be leading the way on 5G on top of potentially getting some server chips going for Microsoft. So like that and the dividend, they're down almost 4%. Collector's Universe, we had a question on the show about finding cheap kind of under the radar stocks in some of the things that we look at, which is again gaming, entertainment, technology type of things. When we were looking through that, I found an interesting stock, Collector's Universe. Check out the video on that where we talk about making that a buy. It's been a really good pick. It's up almost 7%. There could be some huge potential for this stock, and it pays a really good dividend. So it's done well. Very small cap stock. We like it so far with what's going on. Seagate was our last pick, and we like their strategy a little bit more than Western Digital. Western Digital has been up more than Seagate since we picked it, but Seagate, we believe with the way that the cloud services are going, the way people are using Instagram and other video services and things like that, storage is just the demand for storage is just skyrocketing, and it's not going to slow down anytime soon. So any of the hard drive manufacturers, I think, is a really good bet. We liked the business model that Seagate had a little bit more. Hopefully in the long run we're right on that. But so that is our kids portfolio. It is up 5%, which is pretty good. We can certainly do a lot better than that, but 5% is nothing to sneeze at. We're happy with it. We want to keep growing that. Obviously, we got to do better than 5% to get some real meaningful growth out of it. So we'll be targeting, though, to add to these portfolios, some of these ones that are in the red, to buy in more. But I do have some more on the buy list that we should be investing in here soon. I'm not quite done building out their portfolio to the point where I can just add some stocks to it as they're down. Believe it or not, with a big long-term plan on this, I don't mind seeing these stocks that are in the red that are down because it's just another buying opportunity for me. So that's it for today. You can tweet the show at investorxp.com, mail at investorxp.com if you want to shoot us an email. We are live 1:30 Eastern, 12:30 Central on Twitch. So check us out there, interact with us live during the show. If you're watching the recap on YouTube, give us a thumbs up if you enjoyed it. Subscribe to our channel. We're really pushing for people to subscribe to the channel so we can help grow the channel and make the community bigger. Really appreciate it if you give us a subscription or a like, a thumbs up, comments. All of it helps as we look at the feedback to try and make the channel better in what we do here. So thank you for watching today, and we will see you tomorrow.